Hi there, traders. This is Brad Gilbert with today's trading action. All right, now if you've just dusted off your eyes and you've just woken up and you have a look at the daily charts, you'd be thinking, okay, looks like the Bank of Japan have raised interest rates, and that's about it, right? Because on the dailies, there hasn't been a huge amount of follow through, but there's a lot more going on, right? And why I would be saying it looks like nothing else has happened because you know what, the Fed have come out basically saying a September rate cut is on the cards. But we already knew that, right? And this actually tells me a lot about what information the market is getting. Now, we do have access to some good data here. The Federal Reserve, okay, yeah, cut. This is for the next meeting, right? 87.5%. This is the aggregate of all the derivatives and forward swap rates, etc. Gives us that detail. So when we came into looking at what the Fed was going to potentially be doing, right? There's interest rate cuts factored in until the cows come home. So we already knew that. But so there wasn't a huge reaction across the majors, right? If I just come into the hourly charts, right, there wasn't a huge reaction across the majors to this. If anything, the Aussie dollar climbed up off the floor after slightly weaker inflation numbers. The Kiwi loved the move. Okay, market obviously sitting very short. Sterling, well, we'll get the Bank of England today, and a rate cut is, I'd say it's 65.35 for a rate cut. So sterling hasn't really gone anywhere. And euro, well, it's just the sleeping giant at the moment. And the death knell, right? This is why the yen has moved so far. It's because we had the initial announcement from the BOJ. Now, it was about 20% factored in. They go by 0.25. I completely gave it no chance, but they did. And this is where we are. But the devil is in the detail. Like you look at the charts here and you're like, oh yeah, that's pretty wild, right? The price action. But I was looking at a couple of brokers, and if you look at the price action on the yen, right? The low on that on the announcement, this is why you've got to avoid a situation like this. So the high on this bar, which is the hourly bar, 153.80 to 150, and then it spiked up to almost 154 again. This move here was enough to completely take out the trading community. And what that means is a lot of people would have been screwed over on the initial move, trying to get short, like a 0.25% hike. Yeah, the yen rallies and the dollar falls aggressively. But the subsequent bounce was the nasty part of it. Once the traders are taken out, they stand back and wait. But what that does is it's a twofold thing, right? Because the general community outside of Japan, they look at it and go, look at this as a fundamental move, right? Especially after the Fed, where we got the follow through, right? Sort of over here. This is where the Fed sort of really gave it a push down. Interest rates in Japan are higher, right? So the carry trade, where really relies on lower Japanese rates, you know, it's just like, well, this isn't sort of, it takes a little bit of the joy off the table. Then you get the Fed coming in and saying, you know what, we're cutting next month, which on the majors, it didn't do much. But it's a bigger story here on the yen and the yen crosses, because that means especially the major carry trade out of the US, right, being long dollar against the yen. Well, the joy there with interest rates cuts coming in the US. We've got a hike here in Japan, and they've sort of signaled they're going to keep working hard at, you know, bond tapering and maybe even a further rate hike, right? Proactive. The first time the BOJ has been this proactive I've seen in 35 years. So that's a double whammy. So you see the big move down in dollar yen. Now, the good news about this whole situation is we now know what's going on in the yen, right? It's not an easy trade, but it is something we can look at. Now, if you just look at the yen on the dailies, the yen crosses, right? We've got some moves here. We've got to, over the next week or 2 weeks, get into this trade. Now, the BOJ was sort of like partially factored in, but it's the signal of the move. The Fed rate cuts are factored in. So I'm just sort of thinking at the moment, we might get a chance to get in on a retracement here on some of these pairs back towards the cloud. That's what we've got to be looking for, right? Or a break of these support trend lines, okay, on the yen crosses. Now, Aussie and Kiwi are sort of right in the game at the moment. This is going to make it very hard to sort of be, when you're looking at the majors, say Aussie against the dollar, then you look at Aussie against the yen, well, it's a different story. And the Aussie carry trade was a huge trade. I used to call them the samurais, kangaroo bonds, and a whole range of different things back in the day. That is a big clean out, and definitely looking to get in on a rally, if not, on the drift lower, right? This is a longer term move. So we've got to sort of keep an eye on that as we go forward, right? So just quickly switching back to the news, Fed's Powell puts September rate cut on the table as US inflation cools. These guys are ready to go, right? And if you look at the derivative side of things, right, as I said, the whole situation here, man, there's rate cuts like till well after Christmas, right? So, and have a look at this with that weaker Aussie inflation numbers. This is how quickly the tide can turn, right? We were looking at April as the potential for the first sort of cut coming in Australia. Now we're looking at a line ball decision here in November, right? It's brought forward 4 months. We get one more round of weak data, boom. This will change from no change to a cutting situation very quickly, right? So the Aussie is now on the move, right? And this is the unfortunate part. If I come back and look at the major central banks, what are they doing next? Most probable move, obviously cut, ECB, Fed, Bank of England, Swiss National Bank, Bank of Canada. The Aussie and Kiwi won't be far behind. And you've got and this is the kicker here as well for the Japanese yen. No change, obviously, potentially a small chance of a hike. I think that's a bit of a stretch, but this is where the carry trade runs out because all the other developed countries are now in a cutting cycle, right? And you've got there's two parts. I'm sort of getting a little bit excited because we've got all these opportunities here on the yen crosses, right? To consider. The yen's back in play, but it's going south, not north. And then we've got to come back and sort of really assess, okay, what's happening here on the longer term charts on the majors? Now, it's going to be like the Fed are going to be going first, right? I think that's the sort of major part. So we see the Fed go, weaker data, that the economic numbers are now going to be super active, right? So that's something to look at. We do have some levels here. Now, one of the other big movers, obviously, the commodity currencies, Aussie, Kiwi, and CAD all sort of picking themselves up off the floor. Okay, Aussie and Kiwi higher means the CAD higher, but against the dollar. So that's dollar CAD lower. But we've also seen a move in oil from like $75 back to 78, right? So that pushes dollar CAD down as well. A nice, easy one to sort of catch up on. What we are waiting for is some sort of guidance. Like the euro is the biggest traded currency pair in the world, euro against the dollar, but we're not seeing much there. So what do we got going into the markets? Okay, now, or actually, just before I do that, they've just reset the pages here. Like the Nasdaq was up like 650 points, right? Massive risk on day. Okay, you're seeing euro, sterling, Aussie up, and the dollar down against most things, except for the yen, obviously. So we are seeing that clear profile. The US treasuries are lower, right? Lower dollar, classic risk on profile. Equities up. Equities should rally aggressively for the short term at least. Okay. Then we come into euro, sterling, Aussie, Kiwi rallying, and the dollar falling against everything else. Right. Now, we've got to sort of overlay that with the overall fundamentals, right? And there's a lot to take in here, right? So if you're not up the curve, maybe jump on the course there and get yourself refreshed and tuned up. Now, the main event here will be the Bank of England, right? Interest rate cut. So now the forecast is it's a 65-35 chance of a cut, right? If I just come back into that sort of probability chart, the Bank of England here, okay, cut 65%. This means it's going to be active. Okay, so if they cut, right, 35% of traders, put it that way, will have to close their positions or go short. If they didn't change rates, we would get a bigger move because 65% of the market has factored in the actual cut. right? So bigger move topside if they don't change, but if they do change, we're still going to get a move. It's not going to be as aggressive, but we will see it lower. Now, but don't forget this cut is factored in, right? So where sterling sits at the moment is fair value for sterling 65%, right? So I think it might come back down towards that trend line, or probably a little bit lower if they cut rates, and then we'll see what they've got to say about that as well. So when the central banks are looking to cut rates, or there's a change of rates, it is a tradable event. Now, just be aware, like Japan is probably a far-reaching example of where liquidity can disappear, right? The Asian session, not as liquid as the European, right? So we should have full liquidity here on sterling. It's just a matter of what they say with the interest rates. And this is where the sort of probabilities come back into play, because if you're looking at the Bank of England, right, you don't just want to know what they're doing now. It's like for the next couple of meetings. So like a cut now is 65%, right? September, 77%, and then 92% for November, right? So cuts are coming, right? They are on the way. It's either now or later. If they don't cut rates, right, you're going to see sterling spike up, but you would expect the Bank of England to be very dovish, right? And say, you know what, we haven't cut rates, but we definitely will next month or next meeting, right? So it sort of makes it a little bit tricky. What I was trying to get to is the liquidity at the time of the release is the key part that we need to navigate, right? So just be aware, it's not as easy as just placing an order in the market, a pending order. Sometimes what the best outcome can be is like today, the Bank of Japan are out of the way. We know exactly what they're doing. This thing's going south, so it's an easier trade. Whereas the Fed and the Bank of England interest rate cycles are merging, right, as the same, right? And this is different to historical, right? Used to be 6 to 9 months before the Fed would cut, and then say Europe or the Bank of England would cut 6 months later. So you have 6 months of an uptrend, and then it changes. We just have to see how this works out, because it looks like all the central banks are running to the exit door very quickly, start cutting to keep these economies going. But you know what? A good sign is that I think rate cuts are factored in. The Fed are going to be a bit more aggressive. I still think there's upside chances here on, well, Euro has to sort itself out, but sterling, Aussie, Kiwi, and downside dollar CAD, right? And obviously downside yen is where the action is. So, you know, if you're a new trader of the market and you're looking at this, you might be thinking, gee, this is tricky. It is. It's just because there's been a big fundamental shift in Japan, and we are now seeing the Fed. You know, I was expecting this Feb March this year, like these rate cuts to be coming. They are finally here, right? So let's just see how it plays out. As I said, the numbers now will be very important, be very active. So let's just see how it plays out here. But I've got to think the Bank of England are going to cut rates, right? And then say, you know what, we're going to see how it goes from here. Or the other alternative is they go, you know what, we haven't changed rates, but we will next time, right? It's the same sort of thing, but their tone in their press conference or statement can change the move. So if they cut, we will still see sterling dip, right? That's a fact. But in their statement, if they say, you know what, we're going to wait and see from now on, well, you might see sterling just come back a bit, right? The downward pressure would be taken off it. If they are unchanged, right, we should see sterling spike to the top side. But I would expect in their statement to say, we haven't cut, it was a line ball decision, and we're going to do it next time, right? And that's what you will see in this vote count, right? That's what we're looking for, is a change. If they don't cut, right, you get an increase in the vote count to cut, and that is like just confirming that at the next meeting we are on. All right, so that's where we are, guys. It's this may not be sort of so interesting because it's tricky getting into some of these trades, especially on the longer term charts. But I can tell you, this is good to have all of this information out in the airways. The market can sort of start factoring everything in. and hopefully we start to see some sort of normality with trends. The big sort of issue I see at the moment is euro, right? Euro is not in the game. And when it is, it's such an easy trade, right? So we need euro, which is just cruising downside, to step up to the plate. But the ECB are on the same cutting cycle as the Fed. Let's keep an eye on the numbers, and we'll see how it plays out. There should be more trading opportunities now that the yen is back in play. Like it's a really big thing, right? Like when the beast, right, is what we generally called it, because it's a nasty bit of gear. But when it fires, and if I just change to the hourly charts here, when it fires, there's opportunities galore, especially for traders in the Asian session, right? But what we're going to do is, as I said, I'll be focusing very closely over the coming weeks, looking for opportunities to get into the yen trade. I mean, sort of the reversal of this whole move. The good thing is on the hourly charts, it has been sort of trending lower, and we've got levels to get in. You can be sure as hell the Japanese traders, which is the biggest trading community in the world, especially on Forex, they'll be ready to get back into trades here. See how it's trading a little bit sideways at the moment? All we need is a little spike to the top side and get into the trade. All right, guys, plenty going on. So let's just see how it plays out. Today, obviously, the Bank of England is the key game. So tune into that, and we'll see how it plays out from here. All right, guys, have a good one. All the best. Cheerio.